It's my pleasure to introduce everybody here in Seattle to Anthony Pompliano. Pomp is the founder of Morgan Creek Digital Assets. You probably know him from crypto Twitter as well, and he has an awesome podcast that you should all start subscribing to and listen to called Off the Chain. So with that, welcome Anthony. So Anthony, why don't you just introduce yourself?
Everything he said is true. That's about it. No, started Morgan Creek Digital, backed by Morgan Creek Capital Management, multi-billion-dollar asset manager based in Chapel Hill, North Carolina. We invest capital on behalf of institutional investors, and along with that institutional and capital, just kind of look at the world, I think, a little bit differently. And so much more focused on kind of infrastructure, regulated markets, things that those institutional investors can get comfortable with, and we'll kind of talk about some of that stuff today.
Awesome. So with that, let's kind of warm people up to how did you even get started in this, right? You were doing things at Facebook and Snapchat. What's your crypto origin story?
Yeah, so my family's owned data center businesses for the last 40 years. I'm currently the chairman of the company, and it's one of the 400 fastest growing companies in the U.S. And so in that business, you've got basically space, power, put hardware, servers in, and then you rent the servers out for cash flow. And so when my partner and I in 2016 started looking at crypto in Q1, we walked away and we were just like, this is the most ridiculous thing we've ever seen in our life. Like, this is insanity that as investors, we're going to give money to a founder. They're going to give us a token. We as the investor have no claim on cash flow. There's not debt with recourse, and it's not equity. Like, as a founder, right, I've built multiple companies. I'll take non-dilutive capital all day long. As an investor, there's no way in hell I'm participating in this. And so we just said, look, we're not going to participate in ICOs, and just thought that generally was a really bad investment opportunity. But at the same time, given that experience that we had from the data center business, if you look at cryptocurrency mining, it's the exact same business, right? So the idea of taking space, plug power in, put mining rigs in, and then you rent those rigs out for cash flow made complete sense to us. And so my partner and I built 4 facilities throughout North Carolina and Virginia. And, I joke that when you start mining, you need a wallet to point the rigs to. So you got to go figure out what all the wallets are, and you pick the one you want to use. And then you're like, okay, I want to get some cash out. So you got to go figure out, okay, well, where are the exchanges? Which ones are good? Which ones are bad? And kind of work your way through the ecosystem from really, the actual verifying of transactions all the way through to, where do I want to go look at prices? So I get to see all the data sources, and it was really kind of an organic way to do that, which, in hindsight was a blessing because we didn't really get caught up in kind of all the hype and the stuff that probably wasn't as valuable.
Totally, you're just solving the need that you had, right? And, I'm sure it's a little bit easier today to do those sort of things than it was then, but, it seems like it was kind of just command row, right? Command line, try to get that cash out.
I have a photo that one day I will tweet of the first rig we ever built. It's the most embarrassing thing in the world.
Nice. So tell us about that transition. So you see the opportunity. You're like, hey, I have this problem. What happened next? Did you create a company? Is that when you went straight into the investing side of things?
Yeah, we already had a venture fund. It was our first fund was almost fully deployed, and we started to look at where do we want to kind of deploy the second fund. Do we want to stick with the same strategy or do something else? And we just saw that there was a ton of opportunity in the cryptocurrency blockchain space. And there were some nuances as to why we thought that opportunity was not only sustainable, but much bigger opportunity than traditional tech investing. And then we had experience, right? So we had kind of built these facilities and done enough work where in conversations we were having with people, we thought we had a competitive advantage. And so we told our LPs we were going to raise our second fund in the blockchain space.
And how did they respond to that? Because I would feel like most might not like that.
Our first LP, whoever gave us money, responded within minutes and just goes, I'm in. It's just like, all right, I love that guy. Yeah. And the rest of them were, what is this, right? And so there's kind of a wide variety of responses, but a lot of them have doubled down, and so we're off to the races.
And so what do you just to kind of tie into that, what do you think it'll take for other LPs at other funds, for that matter, right? So, there's Andreessen Horowitz. There's a couple different venture funds that have crypto-related funds. What's going to get other LPs to determine to invest in that, or frankly, VCs to set up crypto funds?
Yeah, I think there's three things, right? So we talk about crypto funds. Like, I don't know what a crypto fund is, right? This is all just digital technology. And so we look at it as technology investing, but just like you'd set up a fund to focus on healthcare, for example, it's just setting up a fund to focus on another industry. So it's just technology. So it kind of demystifies some of it. I think two is they're going to have to do this, right? So I'm not in it. Like, when I first started going around the country talking about this stuff, I used to be like, oh, it's like a really good opportunity, and you can make money, and kind of the positive side. I just go straight to the brute facts. You have to invest in this space. Why? The best founders are going into the space, so it's got the highest degree or highest aggregate number of intellectual capital rushing in, the most capital that is actually pouring into the investments, which then attracts the best talents, not just founders, but the employees. And then also it has the highest growing valuations. And so whenever you get something where you've got talent and capital rushing into a market, what happens is it then sets off a flywheel. And so the founders who didn't go in at first, then they say, oh, wait, my buddy just built a company and raised $20 million, and he's off to the races. I'm going to go start a company. Where do I go? Well, I go to the same space. And so what ends up happening is you saw this happen all through 2016 into 17. And even though the prices have drawn down, there's actually many, many more people in 2018 that are leaving jobs at Amazon, Google, Facebook, all these technology companies, and they're going into blockchain startups, right? Either they're starting them or they're going to work at them. And so if you're an investor, the number one rule of investing is follow the talent. Number one rule, follow the talent. And so they're going to have to go do this. Now, the LPs aren't on the ground, so they don't actually get the opportunity to see where our founders going, where our employees going. What they do is they rely on the managers, right? And so I think what we see is there's three camps right now. There's some managers who still say, this isn't real, I don't believe in it, I'm not going to invest. Those numbers are dwindling very quickly. There's two major camps that are investing. There's the people who say, I'm going to set up a dedicated fund to this space. I'm going to go build a team, whether it's internal or I'm going to get external people, and we're going to go deploy capital here, right? There's some things that they do on the fund formation side around the terms and liquidity and things like that are specific to this. Or there's the second group that just says, this is technology investing. We have a venture fund that does technology investing. And so maybe I'll take 15% of my existing fund, but I'm not going to raise a specific fund for this space, right? And so I don't think either one of those is right or wrong. A lot of it is actually driven by what they think their LPs want.
Yeah, so, and you made me think of a question here for all the talents moving to blockchain and so forth. However, from a retail investor side or the new to crypto or blockchain, they see it as a dip, right? So Bitcoin was at 20,000, now it's at 6,000. Is this a viable technology? Should I actually start a company in this space? I have a company in space, so but
whenever I have this conversation with founders, I always tell them, at what point did you think price had anything to do with the viability of technology, right? Yeah. So when Bitcoin was worth, was it 0.3 of a penny, did you think that the technology wasn't real? Well, if it's worth 20,000, does that make the technology more real or less real? It has nothing to do with any sort of relationship there. Now, what I do think is, I use this framework to think about 5 of the top 10 companies in the world are networks, right? So think of Amazon, Facebook, et cetera. All these guys are networks, and Bitcoin is a network. The difference is that with the for-profit centralized companies, the network was growing, right? So I ran a bunch of growth teams at Facebook, and as the network grew, what ended up happening is it was engulfed or surrounded by a centralized company. So the network itself did not have a price attached to it. There was no stock market, if you will, for the price of the network or the value of the network. What happened was the wrapper, that centralized entity, had a price associated with it. First it was in the private markets, it eventually went public, and today you can go see what Facebook's price is, for example, right, the shares. What we're seeing in the decentralized world is the exact same mechanism. There's a network that is growing, right? Metcalfe's law, Lindy effect, all this stuff. But we've taken that centralized wrapper off. And we've now attached the price not to the centralized company, we've attached the price to the network. And so it's very similar. We actually just removed a component of it. And the beauty is that by removing that centralized wrapper, why we're able to do that is because now we have transparency, right? So I always tell people, how many people think it's ridiculous that you're going to make buying and selling decisions on public equities until the next earnings reports? Well, what's going on at the company? Are they losing customers? Are they gaining? Why do we have to wait 90 days, 120 days sometimes, right? Makes no sense. Why can't I look right now in real time and tell what's happening? Now, companies don't want that, right? Because they don't want the volatility to their stock prices, all that kind of stuff. But for investors, why don't we have more access to information? We've never had the ability to, right? It's never been a conversation. And so I think what you see, take Bitcoin, for example, right now we can go and look exactly how many transactions, how much hash rate, all this real-time information that gives us data to make investment decisions. And so that's a very, very different model that I think scares a lot of people. But blockchain technology in general, all this is doing is laying the framework or the foundation for automation. That's all that's going on, right? So if you think of every single thing that you're seeing happen, it's just digitizing stuff. So forget tokens, forget blockchain, forget all that. We're just digitizing assets, products, services, companies, et cetera. Well, when that happens, we just get closer and closer to automation, right? So I think that's really the kind of shift here. And so I really push people, like, get away from thinking about crypto, blockchain, all that stuff, and just think of this all as digitization and automation. Now all of a sudden, every single person that I talk to is like, of course that's going to happen, right? That they're much more comfortable talking about digitization and automation than they are about cryptocurrency, right?
Yeah, I think you said this yesterday. Would you rather trust a human or trust a
machine?
A machine, right?
Here's the example I use. How many of you, if you go to a new city, still ask somebody on the street corner for directions versus use Google Maps? Right? Well, 20 years ago, before Google Maps existed, people asked people on the street corner, and you crossed your fingers and hoped they were smart, and they told you the right way to go. Now we trust machines more than we do humans in some subset of situations, right? So that's one. How many of you would rather ask a friend a question versus ask Amazon Alexa? Right? Some people still
I don't know, I'm kind of scared of Alexa, but
some people would, right? So it's not everybody, but for the most part, people are becoming more familiar with and trusting these machines. Now, if we go kind of into the currency world, the Federal Reserve, what happened yesterday? Anybody know with interest rates? Nothing. They didn't do anything, right? Who knew the day before that they were going to do nothing? No. People thought they knew, right? But nobody actually knew what they were going to do with the interest rate decision. With Bitcoin, we actually know not only every transaction that has ever occurred in real time right now what's happening, so how much money is being printed, but we actually know every single interest rate decision for the remainder of the supply schedule of Bitcoin. What am I going to trust more? That a bunch of people walk into a room and they come out with a decision because they all today were hungry and they didn't like something, so they decided to move the interest rate? Or am I going to trust the algorithmically driven, transparent code of the machines? Well, I'm cool doing it with my phone for directions. I'm cool doing it asking a question, right? I'm probably not cool for majority of people, yet trusting money with the machines. But 5-10 years from now, we're all going to trust the machines. The machines are already in charge.
Yeah, I want to go into that a little bit. So you were talking a lot about decentralization, centralization. I know you're a fan of decentralization, obviously. So when it comes to trusting the machines and we're giving the machines this information about ourselves, touch a little bit about why decentralization matters so much from that context.
Yeah, I mean, look, we'll use the Apple example. These fucking people, man. Sorry. So I got this podcast. We recorded this episode of some guy talking about Bitcoin, and he's like the bullish of the bullish. Posted, it explodes on the internet. Gets up to I think it's number 4, number 5 in the U.S. In the investing category. All these people are listening to it, and 24 hours after we release it, people start tweeting at me, "I can't find it." Well, you're just user error, right? You're an idiot. Go figure it out on the internet. And then all of a sudden I start looking for it. I can't find it. It's not in the rankings anymore. Then I can't find it in search. And so I was like, that's weird. Maybe it's just a glitch or something. It'll come back. 4 days later, it's still not in the rankings. And I was like, what the hell's going on? So I finally tweeted, and I was like, this is bullshit. They took it out of the rankings, took it off the search. And the reason why I said that was because with no warning, no explanation, a centralized company made a unilateral decision to remove content that we had put up, right? Now it's a podcast. Like my life's not going to change whether the episode's up or not. It's not really that big of a deal. But the interaction with a centralized company where they had all of the power and could make a decision that, imagine if my business was reliant on that piece of content being up. Imagine if my livelihood, if that was a bank, right? Any of you ever tried to go to the bank and get your money out and they won't give it to you? People are like, yep, man, we're really dumb. We still give them our money, right? Go on Saturday at noon, right, and try to get your money out. Not going to give it to you, right? Go on Saturday and try to send it from one of your bank accounts to another one of your bank accounts. Not going to let you do it, right? And so I think that what we're seeing is, I actually don't believe decentralization is the answer to everything, right? So the framework here to use is, there's nobody who can convince me that Facebook, Amazon, Google, kind of all of the internet winners of today could have been as successful as they are if they had started out decentralized, right? Fully decentralized. It just, the technology didn't make sense, right? The ability to coordinate human capital, resources, et cetera, all together and to then build companies and grow them wouldn't have happened. So centralization in some areas is actually really powerful and really important. But I think that what we're starting to see is this hybrid model. So you're starting to see teams come together and say, I don't know you guys, right? The five of you at this table, I don't know. You all live in different places in the world, but we can actually communicate, we can coordinate resources, we can build something. And there's some centralization among the six of us, right? So they could come arrest every single one of us. You could get hit by a bus, and the rest of us could, fall off a cliff. Like, there is centralization here to some degree, and something will die. But the product we produce from a centralized team can be decentralized, right? And this is what you see, like Augur, for example, right? Where they basically release it to the world and they take themselves out their ability to actually do anything on the back end. And so that becomes a very, very interesting world where founders are actually having to learn to be less selfish. Like, this is completely against human incentive, right? I'm actually going to give up control intentionally to protect the product from myself. We have founders that are raising money that are trying everything they possibly can to stay in power forever, right? Not give shareholder votes, get extra voting rights, all kinds of crazy stuff. That's what's been going on. And now all of a sudden we're saying, wait a minute, the people who may win in the future are the people who actually act the least selfish. Mindset change, right? And so when you start to think about that stuff, it's just, we're going to have to learn how to build companies differently, and decentralization. Not everything has to be decentralized, not the entire organization has to be decentralized, but components of it are going to be. And I think that's going to be really powerful when that happens.
Definitely. Yeah, the whole goal is, right, extract as much value as possible, but at the same time, what does that mean for the company and the people involved? You're probably aware of Chris Dixon. He has a really awesome blog about decentralization to centralization, how it's sort of ebbed and flowed, so I'd take a look at that. Let's move on to crypto Twitter. So you're crypto Twitter famous. For those that aren't familiar with crypto Twitter, how'd you do that?
I have no clue. No, so let me back up real quick. The reason why I think Twitter is so important, how many of you in here are on Twitter? All right. How many of you in here have ever learned something on Twitter? Right? I actually think some people raised hands who aren't even on Twitter learn something on Twitter. How many of you in here have ever met somebody on Twitter and either had a conversation with them or met up with them in real life? How many of you in here can say the same three things about LinkedIn? Some, right? How did Twitter become a replacement to some degree to LinkedIn? It's the quality of the people and the content, right? And so the way that they've done this is, it's just easier. How many people in here have written a book before? Anybody? Congratulations, I'm impressed. How many of you in here have ever written a blog post before? All right. How many of you in here have ever tweeted before? The most hands. Why? It's easier to do, right? I don't have to have enough to say to write a book. I don't have to have enough to say to write a blog post. I can just write this little content. And so I think that what's happened is people have just gotten there, and it's like this stream of consciousness, right? I've heard people describe it that way, and I agree with that. Now, when it comes to crypto Twitter, right? So this is basically a group of people on Twitter that are all around cryptocurrency. You got to be pretty crazy to have started doing this stuff in 2009, 2010, right? Everybody like knows the story of somebody who they sold all their assets and bought Bitcoin, and now they're like rich, right?
Yeah, crazy or lucky, right?
No, just crazy. like you were crazy enough to do it, and then you got lucky, right? But like that was an insane thought from a risk reward standpoint, was to sell all of your assets and do this. Now over time it has become less risky, right? But I think that people are just as attracted to the community as they are to the technology, right? And so we believe from an asset management standpoint, the most defendable thing in the world is community, right? Think of a family, right? I grew up with 4 brothers. Inside our house, we hated each other. We beat each other up. We were super competitive. Anything I could possibly do, whether it was warranted or not, to get my brother in trouble with my parents, I did. Like all that stuff. Anybody outside of my 4 brothers tried to mess with one of them, they had all 5 of us in their face, right? Because it was a community, and it was super, super defendable. And no one, no matter how hard they tried, could become one of our brothers, right? And they could never convince one of us to externally be negative to each other. Well, think of the community in crypto, right? It's very similar to that in the sense that how many people feel like if they're arguing with somebody, right? So Bitcoin versus Bitcoin Cash, for example. Those 2 tribes, they go at each other, they go at each other, they go at each other, right? The second Narelle Rabini's like, crypto's stupid, everyone turns is like, no, you're stupid, right? And so this element of like community is very similar. There's a bunch of infighting or like the tribalism, all that stuff, but the second that somebody outside of the community attacks or says that something is wrong, we all bond together and go after them, right? Or defend against them. And so that element of community is really, really important because the technology is not always going to work. The products aren't always going to work. But this idea of like, I sense we're all like the virus is spreading. It's because literally people get infected, right? And that sounds ridiculous. But when you learn about Bitcoin, decentralization, blockchain, et cetera, I've never met anybody who puts the work in to actually read about it and learn about it that walks away more skeptical than when they first started, right? And what's happening?
True.
You're becoming more of a believer. And so I literally tweeted right before I came up here, like the Bitcoin Believer Starter Kit is like, you read the white paper, you get a digital wallet, you send a transaction, you're like, oh, this is pretty cool, and then you go tell your friends. Well, like, that is just how virality works. And so that is what is the most defensible thing here to me is actually the community and the virality of the network growth. And I think that's something that the legacy financial system and kind of the centralized companies don't understand as well as the decentralized world.
Totally. Well, with that, I'd like to open up to questions from the audience.
You were like locked and loaded with the question right there.
We'll get you a mic.
Just yell. I'll repeat it.
No, it's for the video.
Oh.
Thank you. I actually do agree with you that digital automation is the future, and I will be looking at it. But can you just talk a little bit about the ethics and the morality of too much digitization? Because we know about the inherent bias or the unintentional bias that comes from machine learning, where all of a sudden you're going to exclude whole groups of communities from participating because that's just the way that the filtering works.
Yeah, so I think there's a couple of things, and the context here is, look, I ran teams at Facebook. I think everyone's got their opinion as to whether that's good or bad. And kind of at a high level, the thing that I always describe is whether it's Facebook, some other digital platform, or the things that will be built, it is a net positive impact on the world, right? And so there are definitely issues with Facebook and every other digital product or service that gets built. It's highly complex problems that you're trying to solve, but I think the high level, the positive impact is pretty obvious. Now, when it comes to machine learning and some of the automation stuff, the part that humans don't like to talk about, machine learning is just going to make it more obvious what is already going on, right? So, like, let's just go right to the heart of one of the most controversial issues. College admissions and race. Everyone's like, oh shit, right? So today, there's college admissions that are decisions that are made based on a whole host of factors. Race actually is one of them, right? Because they have certain quotas they've got to hit, all kinds of different things. Well, if we use machine learning to allow the machines to source, vet, and decide on college admissions, it's actually not going to, the machines aren't going to be racist or not racist. It's just going to highlight whether humans are racist or not racist in the current process. And so I tend to think less of, like, automation and machine learning is bad. And I think more of, I don't think that a lot of humans want to have the conversation as to, are we good people, right? Or are we the ones who are messed up and then we're teaching the machines to just do what we're doing? And so I think that that's a very nuanced but important difference. And so if you look across a whole bunch of machine learning stuff, like, humans still write the code. And so, the conversation of the machines are bad. I actually forget who is this. I can't remember if it's Kevin Hart or Chris Rock has this stand-up routine. And what he says is, anybody here know an insurgent? Right? Like when we go to war, we're like, oh, we're going to go kill the insurgents, right? I don't know any insurgents. Kill them all. Right? I'm like, wait a minute. Oh, we're going to go kill, like, another population? Oh, other humans? No, actually don't kill those people, right? But we call them insurgents because it's something that, oh, those are the bad people. Those are something we don't know. It's not it's not a race. It's not a demographic. It's just a thing that we can botch a bunch of people together that all of a sudden becomes easy to rally around. Machines are the same way. Anybody here talk to a machine? Got a machine as a friend? Nah, screw them all. They're all bad people, right? They're all bad machines. Well, no, we're the ones who are creating the machines, right? And so I think that we just have to have that serious conversation to really get people to wrap their head around that.
Who else has a question? You pick, Audrey.
Decentralization you speak of as kind of a seed of purity. No one can interfere with everyone's interest. Can we really create decentralization, whether it's the business logic that's put into the work to advance the blockchain, whether it's, well, I'll put it in the open, but I want to preserve, I'm the only one that knows how to do the wallet right, or I'm the only one that knows how to interface to SWIFT. So is it really in the open, or is it somebody choosing where they're going to control it?
Yeah, so the best way to answer this, I think, is I wrote this morning about, so Ether Delta, yesterday the SEC came out and said, look, they've charged, was a decentralized exchange, and they've settled with the founder for running a unregistered securities exchange, right? And the thought process previously was, oh, it's a decentralized exchange, and therefore there's no one to go after, right? A couple of things came out of that. One is they went after the developer, right? So there's somebody who, again, wrote the code who is responsible for it. And the second thing is, if you look at kind of the Preston Burns of the world, the Stephen Paleys, right, all these lawyers that are pretty well versed in this world, what they're basically saying is it wasn't decentralized enough, right? And the trade-off of that is if it's not decentralized enough and it had become more decentralized, could they still have run a business, right? Like, can you run a business with true decentralization? I think that's your question, right? And I think that remains to be seen. I don't think we have an answer to that yet, right? And so the best example I think we have of true decentralization is Bitcoin, but there's no business. There's no kind of manipulation or human interaction that drives everyday decision-making, et cetera. And so it has an advantage in the sense that it is not a for-profit type organization. Now, you could also argue that it's not truly decentralized, right? And it gets to the definition of what is decentralization. If it's decentralized enough, is it almost, that's good enough for us? Or is there some bar that it needs to meet in terms of, some penetration in the population of the world or something like that to actually reach a definition of decentralization? I don't think we have those answers yet, right? And I think that's probably a bad answer on my part, but I just think that's where we're at the moment.
Let's do two more quick questions. So this gentleman right up here, Audrey.
Yeah, I think the machine learning and the automation you talked about, I refer to it as roboticizing, and pretty much that's definitely going to be a predominant mode of operation, I think, within 5 years. But in terms of machine learning, this is just my opinion. I'm curious about what's going on with Google. And the reason I ask that is because over the last few years, the search algorithms that I've seen have been actually getting worse and worse in terms of coming up with answers. And that goes to maybe your blog is the curation of information. I'm wondering, do you see a role for blockchain to actually start getting involved in the curation of the quality of information that's actually being used?
Yeah, so these questions are difficult because it's built on the premise that we live in a binary world, right? And I think I just fundamentally disagree that you and I can look at the search algorithm at Google and both objectively say it's good or bad. It's improved or it's gotten worse, right? And so I think that when it comes to these algorithms, part of this is the algorithms actually may be really, really helpful for you, but they're really bad for me, right? And it could be the same algorithm. And so some of this is like humans are just much dumber than the machines, and so we haven't figured out ways to measure quality and things like that. We only can measure quality based on the goal that we define, right? So there's not a lot of objectivity to it. Now, with that said, I think that what blockchain is doing, so the big secret of blockchain is there's only 4 assets in the world you can own. You can own a stock, a bond, a currency, or a commodity. There's only 4 asset classes. Every other asset class that most people in finance talk about is not an asset, it's an access class. So a hedge fund, for example, just gives you access to one of those 4 assets, right? What blockchain is doing is it's tokenizing or digitizing those 4 assets, right? So we fundamentally believe 100% of every person in this room and every institutional investor's financial portfolio will be digital, right, or will be tokenized. Because how do we actually transact today, right? And the example I use is how many people in here have ever bought or sold a digital currency? All right. Raise your hand if you think you've never bought a digital currency before. Anybody? I shouldn't ask people to actually raise their hand. So the people who think they haven't, you actually have. The US dollar is a digital currency. It's an inflationary system that over 90% of the actual currency is in digital form. Less than 10%, I think it's 8% of the money supply is in physical notes or coins. So 92% is digital, right? It's just an inflationary system. Bitcoin, for example, is just a deflationary system that is 100% digital, right? When you get into that world, the algorithms that are needed to interact with these assets are going to serve different purposes, right? And I usually use it like, think of a car. Everyone in this room needs a car or some way to get transportation. There's what type of car is it? What color car is it? How fast does it go? Do I own it? Do I lease it? Do I use somebody else's? Do I now call somebody to pick me up in theirs, right? It's all a car. And so I think with algorithms, it's the same thing. Even at Google for search, technically there is traditional search, how we think about it. So I Google, best restaurant. Then there's search within the Maps product, right? There's search within the local business product. And each one of those is a different type of algorithm trying to accomplish a different goal. I don't think that we can just kind of say good or bad. And so I think the real challenge, though, is not so much in the design of the algorithm. It's actually in the design of the goal, right? And so I would push back and I would say, on the traditional search bar, are they actually moving the goalpost on what they're trying to accomplish? Because it used to be how quick can they get results and how accurate are the results. Now what they may be doing is they may be saying, look, accuracy, the definition of accuracy is changing, and they're trying to actually remove less authoritative things that they deem lower quality, and so accuracy is now something else. I don't know, right? But I think that's the type of stuff you got to think about.
So with that,
Getting
sorry,
yelled at.
we could talk on this kind of stuff all day. Anthony's going to be here for a little while. Our networking break is going to be here in about 15 minutes. So with that, Anthony, thank you so much for coming up to Seattle. Really appreciate you being here. Hope to have you back at Token Forum in the future. Everybody give Anthony a round of applause, please.